The U.S. dollar is king when it comes to global financial transactions. Yet there is talk of the dollar's impending doom.
And some nations are already moving away from using the dollar for international business. Dale Hurd explains why and what the dollar's demise could mean for your pocketbook.
There's been plenty of talk lately that the U.S. dollar could lose its reserve currency status.
Is King Dollar going to be tossed off of its throne?
The world has become too dependent on the U.S. dollar.
Analysts have been warning of the dollar's impending doom.
A growing number of nations are turning away from the greenback as a payment currency, and that has led to fears that the U.S. could lose its position as the world's top reserve currency. Reserve currencies are held in large quantities by central banks in other nations for financial stability and are used in international trade. It's been a big advantage for the U.S. economy. For instance, the federal government can pay for any foreign expenditures by simply printing more money. If the dollar were dethroned as the world's reserve currency, some have warned that we would see soaring inflation and a catastrophic drop in our standard of living. Other economists, however, believe the effect would not nearly be that dramatic. Experts not only fail to agree on whether the dollar is doomed to lose its reserve currency status, they also differ on what the economic fallout would be if it did. Pete Earle at the American Institute for Economic Research is one of many economists who say there is no short-term threat to the dollar's reserve currency status because there just aren't better options.
The Federal Reserve has made a lot of mistakes, and certainly they debauched the value of the dollar. But in the land of the blind, the one-eyed man is king. The Fed is still very much the gold standard in monetary policy.
And he says there is no reason to be worried that the dollar will be replaced by the Chinese yuan.
The odds that the Chinese renminbi or yuan will take the dollar's place are at present slim to none.
The reason is China won't do what it takes to become a top reserve currency. It won't allow the yuan's value to float, but pegs it to the dollar, and its capital markets are largely closed to investors. The U.S. has the deepest capital markets in the world.
So if you want to be a reserve currency, so-called, you need a bond market, you need a securities market, a big one, and you need a lot of other features, a network of dealers, underwriters, settlement, clearance, custodians, depositories, hedging options, repo, futures, options, et cetera. And above all, you need the rule of law. Who trusts the Chinese? Nobody. Who trusts the Russians, really? Well, nobody.
Talk of a BRICS currency involving Brazil, Russia, India, China, and South Africa is still largely just talk. America's share of the reserve currency market has fallen, but mostly because of the creation of the euro. If the dollar were replaced as the world's reserve currency, your money would be worth less. Foreign goods would cost more, inflation would increase, and the U.S. government would have to rein in its runaway spending because fewer nations would be buying U.S. treasuries and financing our huge federal debt. Nations currently ditching the dollar as a payment currency is a more pressing issue. Some nations are dropping the dollar simply to cut out the middleman. They want to use their own currency when trading. Others are afraid of a weaponized dollar after the U.S. froze hundreds of billions of dollars in Russian reserves because of its invasion of Ukraine. Others want to see America's economic dominance weakened. This is a potential near-term threat to the dollar's value, but most economists say that any threat to the dollar's reserve currency status is many years, if not decades, away. Dale Hurd, CBN News.